Sorry, I have not turned on the projector. Right. Good evening. It's a bit lonely today, the class. Okay. So 1 week ago and today, what's the difference? We got a new Prime Minister. Alright. Then you never know, like 2 weeks later or 3 weeks later, you got one more new Prime Minister. Voila. And I pity the small kid, Because you don't imagine when they learn sejarah, right? They have to say Perdana Menteri pertama, so Tunku Abdul Rahman. Then after that come to number 4, Mahathir ma. Then number 5, Badawi ma. Then Najib ma. Then after that, Mahathir. Alright? Then Mahathir become interim. Then Mahathir again. Then after that, they will learn Muhyiddin. Then if Mahathir become Mahathir again. Wow, then the kid be so confused. Huh? Pity the kids. So actually, you all never think from the kids' perspective. Very hard to study one. Can see that? So luckily Muhyiddin became the Prime Minister so that if Mahathir become again, not so confusing. If not, the student will be so confusing, Mahathir, then be thinking, how come Mahathir is Perdana Menteri number 6, number 7, then number 8 also Mahathir one? Then the kid be like, then they don't understand one. Then you explain, wow, then susah, alright. So at least now got Muhyiddin, then Mahathir, alright. Okay. Page 102. Malaysia. Okay, so we will go through some of the capital allowance rules. Actually, a lot of things you know already. So let us just revise back some of the basic things before we move into the new one. Okay, number 1 is the rule concerning non-commercial vehicle. Now, this is not new. You probably will know that, alright? Now, you know very well, like if you buy a vehicle and then you use it in the business, you can claim CA on the vehicle, right? But the catch here is the restriction on the qualifying plant expenditure. So we know that there's either a restriction of 100,000 or 50,000. So I've written down the rule here. If you want to get 100,000, 2 things you need. One is the vehicle must be new, and the second one is the cost of the vehicle must not exceed 150,000. So that's the main requirement. Okay. Now anything that is not that, then you can only have qualifying plant expenditure at 50K. It's not new, right? Okay. Now, then we also have looked through small value assets. And basically for small value assets, right, the reason why you call it small value is when the cost of the assets itself does not exceed 1,003. Okay, so if you buy aircon 1,200 ringgit, now there's a small value asset. Now what's the difference if asset is small value and the asset is not small value? Now small value means you will be able to claim CA at what rate? 100% AA. So you don't actually need initial allowance, okay? So you will claim 100% AA. So what you are enjoying is the speed of claiming allowance, alright? You're not enjoying any additional claim, but you are just speeding up the claim. So if you look at, if I buy a normal aircon, let's say the price of the aircon is 1,005. Then you will claim the normal rate. And the normal rate for capital allowance is what? 20% IA, 14% AA. So if you take 2014, then you can see how many years you will take to claim the aircon if it's 1,005. But if you buy the aircon 1,003, you take one shot 1,003 in that year. So it's only the speed that you're able to enjoy. Now, and basically what happened is there's a special rule if you happen to be a small company, right? There's a special rule. Now, what is the special rule? There's an unlimited 100% claim. That's the only special rule. Because if not, you can only have 100% up to 13,000 a year. Okay? You can get 100% up to 13,000 a year. Now, does a small LLP get this unlimited claim? You know, LLP can also be small, right? Because LLP, the treatment is very similar to company. So you can have a big LLP or a small LLP. How do you become a small LLP? I just want to see your wording. How do you become a small company? We say the paid up ordinary share at the beginning of the basis period must not exceed 2.5 million ringgit. Now LLP? Yeah, it's the capital contribution. So the only change is we change the word paid up ordinary share into capital contribution. But the rest are all the same, okay? So does a small LLP comes to enjoy a 100% claim that is unlimited? No. There's no such provision. Meaning, even if you're a small LLP, you still have a restriction of 13,000 a year. Alright? So it will still be 13,000 max. Now, what about a sole prop? You know, a lot of people thought when you look at a small company, they will assume a small company would also apply to a sole prop, which is totally not the same because sole prop is an individual. So do you get an unlimited claim? No. So please make it very clear, okay? Now, and the other thing that we have to be very careful is the distinction between a small value asset with short life asset. It's not the same thing, alright? Short life asset basically refers to those assets that the life is maximum 2 years. Okay, the life is maximum 2 years. Now, and technically when your asset life is maximum 2 years, it's actually impossible for you to claim CA. Right? You cannot claim CA if the life is 2 years. The reason why I say that is because if you understand the principle of CA law, right? If your assets cease to be used within 2 years, then it will be regarded as disposed. And we do have a rule under para 71 that says that if you dispose your asset within 2 years, you have to claw back the CA. So the law itself is contradicting the claim. That's why you cannot claim one. So that's the reason why they say if you do have a short life asset, they will not be given capital allowances. You don't have CA. Okay? And then the other thing is, if you don't have CA, then what do you do with a short life asset? Now, you will have replacement costs. Okay? You have replacement costs. So you claim replacement costs. Now, what do you mean by claim replacement costs? You claim as a revenue expense. That's what you do. You claim as a revenue expense when you replace. Alright, when you replace. That means when you buy the next one, then you will claim this as a revenue expense. And likewise, when you claim the expense when you replace, if this asset you sell, right, then the disposal value will be treated as gross income. So we will not do any BABC adjustment. So that's how we treat short life asset. Okay. Now, then this is one thing that we have to be very careful in the exam. We'll study this specifically. It's to do with financing options when you want to buy assets, leasing. Okay, generally when you have a lease, right? Okay, when you have a lease, we look at a lease as a rental agreement. You're renting an asset. That's it. That's a lease. And when you rent an asset, what you're paying is rental expense. And paying rental expense, you should claim an expense deduction. So if, let's say I go and lease a photostat machine. Every month I pay the lessor 1,000, let's say 500 ringgit for the machine. So the 500 ringgit will go to my taxcom and claim as an expense because you're paying rental. Okay. Now, but I highlight in the note here and say, for tax, right, it's actually necessary for us to distinguish whether this is a lease or this is a deemed sale. Okay, if this is like the first time you come across the term, that's fine, because this is something that will only be studying in the future. So there is a special treatment when lease is deemed as a sale agreement. Now, so we will see that when we come to that chapter. I think it's somewhere around, let me see if it's, yeah, it's actually in the notes in chapter 12. Okay, in these sets of notes in chapter 12, you see that's deemed sale. Okay, now, so don't mix up with accounting terms. Like if you come across the word finance lease or operational lease, you tend to mix them up. Now, so that's nothing to do with tax. So just beware of that. Okay. Okay. Then lease is not the same as hire purchase, even though they have very similar features, like you're paying monthly. So a lot of people thought that hire purchase and lease is actually the same thing. No, it is completely different. All right. So when you enter a hire purchase contract, that's a HP. Okay. And when you become a HP, you cannot be a lease. Once you enter a HP contract, you cannot become a lease. That's basically what the laws provide. All right. So when you have a HP, what you're doing is you actually take a loan, basically you're taking a loan to buy an asset that you're allowed to pay over a period of time. Now, but the law has a specific treatment dealing with HP. So if you read the Act, you have one section dealing with HP. So that's why in that case, so when you take a HP, it's actually important to realize that there will be two elements. One is the capital that you have to pay back. And of course, because this is a loan, right, you will also need to have an interest portion. Now, I have a short example here just to deal with the numbers, just to refresh what we've learned those days. Sharp, 30th June is the year end, and has traded in an old machine for a new machine at the trade-in value of 30,000. The balance, 90,000, is financed using HP. Now, meaning the cost of the machine is 120K. Agree? This machine, the cost is 120K. That's why when you trade in, you get 30,000 as a deposit for that machine. So the balance 90,000, you got no money, so you're going to take a HP. So basically what you do is you borrow. Now when you borrow, right, okay, you always look at the amount that you borrow. Now I usually say take that as a HP loan. Okay, and HP works on straight line. So it's not like housing loan where you're on reducing balance. HP works on straight line. So it's very easy to calculate. Right? So if you say that you borrow 90,000, you borrow for 36 months, right? So you just take 90,000 divide by 36. Now you get 2,005 per month. That is your capital. So you have to return back the bank 2,005 per month. Okay, can Now, but read carefully. They say that Sharp is required to make a monthly installment of 2,008. Now, why 2,008? Now, obviously, you know that's because you have to pay interest as well. So the 2,005 is your capital. Then plus 300 is your interest. That's why the total amount you pay is 2,008. Okay, now just use some space here to illustrate the figure for the first 2 years of assessment. Now you see here, so what happened now is I need to find out in year of assessment 2014, how much is the amount that you've incurred. So what is your QPE that you've incurred? Now you started off with 30,000, right? 30,000 is your deposit. then you're supposed to pay 2,005, right? Now, of course, you have to be careful with timing, because if your year end is June, if your installment starts in April, you only pay how many months? 3 months. So meaning you actually paid 37,005 in that year. Now, so what will the claim be? Now, since 2014 is your first year, so you expect there will be a 20% that you've claimed as your initial allowance. Now that gives us 7,005. Now then you should have an annual allowance which is 14%. That's 5250. Okay, now then moving to 2015. So what you're doing in 2015 is you continue to pay installment. So the value of the installment is 2005. Now that year you should be paying 12 full installments. So you're going to get 2005 times 12. You're going to get that as 30,000. Now, and of course from there then you will continue claiming. Now don't forget that you get initial allowance for the amount that you've incurred for the first time. That's why there will be an initial allowance for this amount incurred in 2015. So that will be a 6,000. Now then the annual allowance will continue to be claimed for those amount that you've incurred. So for the 2014 you carry on with 525. The 2015 you then claim 4,002. Now, and that pattern goes on to 2016, 17 until you finish. Okay? Now, so that's basically how hire purchase works. Now, hire purchase affects us because of the timing. The way you claim will be affected by the timing. Now, please also remember, this is the interest portion which you claim as an expense. So you must claim this as an expense against the business source. Alright, against the business source where the machine is put to use. Okay? Okay, now go to page 103. Alright, page 103. Next page, okay? We still have accelerated CA, but these are very old rules. They are rather old, so I don't intend to go through. Alright, but if you read the recent stimulus package that the ex-Prime Minister announced on, alright, there he mentioned accelerated CA. So they basically gave something like what you're saying, that the CA rate is much faster. So the thing about CA rate being faster is you claim more, so you actually save up in terms of your tax cash flow. So I mean, example, if I'm going to buy a car for 100,000, supposedly I will claim 40, 20, 20 like that, right? But now I can claim one shot 100,000. So it's basically encouraging people to spend money, because now is the time that the spending will drop. And the government still project we have 3 to 4% GDP. I don't know whether we can achieve that. I seriously doubt so. Okay. Alright. But you are always in the evergreen line. That's why accountants are okay, right? Because business do well also need accountant. You want to close business also need accountant. Correct or not? You want to wind up the company also, before you wind up, you also need an accountant to look at the audit and do all the work. So you don't worry. Whatever time you have, your job is always there. Okay? And people ask that, what the new modern technology, will accountants become obsolete? Let me ask you a question. Has double entry changed? Has double entry because of automation become quadruple entry or 5 times entry? Never, right? The principle is the same. So I don't know which part that I have learned 20 years ago and today cannot apply. I don't know which part, because to me everything is the same. It's still applicable, just that things get more complex. That's my view, alright? In case you are very worried about having no job, don't worry. And every listed company must have one independent director who has to be an accountant. So, how to obsolete us? Cannot obsolete one. Okay, alright. Doctor die first, so accountant won't die one. Mark my word. Okay. Now, okay. Number 7. Okay, this is something that I will not do today, but I will discuss with you when we come to read. Okay, basically I just want to let you know that this is a new provision of the law, alright, that tells us about conditions where industrial building, they will not give you the industrial building allowance if you don't own the building and you don't run the business. So that's something that they come in to make the industrial building allowance a bit more strict. Those days, the clarity was not there. But now this law is added to make it clearer. Alright, for example, like if I own a building and I rent the building to someone else that will use it and run it as a college. And you know, college is an education building, which supposedly you can claim IBA one. Now, those days we have this issue about, can the owner claim IBA or not? Now, it's a very practical issue. So you see, for example, like this place, MCKL, the building belongs to Methodist Church, which is a different body. The college belongs to another entity, which of course is still under Methodist Church, but from the eyes, you know, because of the legal entity, they are different person. So now the owner of the building is A. The owner of the college is B. So we are using the building to run the college. So supposedly when you're using building as a college, you should qualify as industrial building. But this law has basically disqualified us from claiming. And we'll see that in the future. And that can be very significant. Imagine if this building worth 50 million. 50 million, you're supposed to get a tax relief of 24%. 24% of 50 million. That means you have lost so much more tax relief, you know. You pay about, how many percent? 450, 12 million extra, right? Okay. So that's in terms of taxes you have to pay. Now, but we'll not see this now. I'll discuss when I do the read chapter. So I'll explain that to you again. Okay, go to page 104. Okay, I have nothing much to highlight to you about condition to claim your IA and AA. I don't think exam will actually ask all these kind of basic things, so I won't look into that. But I want to discuss the disposal part with you. Now that's important because in your ATX, you always have to deal with disposal because you have to deal with restructuring. So when you restructure, you normally will dispose asset. Like example, if you want to move business A out from this company. So when you sell off business A from this company, that means there will be a transfer of assets. So disposal will come in. So that's a very important thing. Now normally when we dispose asset, okay, the first thing we usually ask is the disposal made within 2 years from the date of acquisition? Alright? Now, if the answer is no, meaning it's already more than 2 years. Okay? If the answer is no, it's already more than 2 years. Alright? You dispose after 2 years. Okay. If it's yes, that means you're doing it within 2 years. Alright? Now, this is what the law tells us. When you dispose asset within 2 years, do you have a justifiable reason to do that? Okay, what is a justifiable reason? Okay, we follow the act, they use the word death. The owner passed away. That's one justifiable reason. Like example, I'm a sole prop. Okay, I'm sole prop. I have a kedai runcit. Now suddenly I die of heart attack because we changed prime minister. Okay, I died. So my family member don't want to continue my business. So what will my family member do? Sell all my assets. So my kedai runcit close, sell all the assets. So when they sell all my assets, obviously there will be some assets that I just bought. Now, but those assets that I just bought, even though I dispose within 2 years, it's fine. it will still be called as a justified reason that why you're selling. So I give example, this is what the law say, if there's a death, okay? Now the second reason that, although it's not mentioned in the Act, but that is the reason accepted by the Inland Revenue, is when you buy an asset that it turns out to be not suitable for your use. So the asset is not suitable. You bought a wrong asset lah, basically. Okay? Like I bought a lorry, then I realized that the lorry capacity was not okay for my business, so I can't use it. So of course you can't use an asset, what you're going to do? You're going to sell, right? Now then that can be a justifiable reason that you bought something that is not suitable. Okay? Now, so if you have good reason to justify the disposal, yes, it goes up, meaning you have to do BA/BC adjustment. Okay? Whenever you just dispose an assets in the normal circumstances, what you do is you do a BA/BC adjustment. Now, how do you do a BA/BC adjustment? The formula is you take what is the disposal value and minus off the residual expenditure. Okay? Minus off the residual expenditure. Now, you either get a BA or a BC. Now, BA means you make a loss. BC means you make a profit, a gain. That's what BA/BC is for. Okay? Okay. Now, we do have some rule over BA/BC. Okay, first, the rule concerning DV. Alright, the rule concerning DV. Now, it has to be based on the higher of the market value or the proceed. Okay, so in the Act, it says that disposal value has to be based on higher of the market value or the proceed. Alright, the net proceed. Okay, and how do you get your RE? Now, RE is derived by taking your qualifying plant expenditure minus the IAAA that you have claimed. You must claim lah, because you know there are cases that you cannot claim, right? Example why you cannot claim allowance is when what? When the asset is not in use. You don't use the asset, you cannot claim. Okay? Now, so when you don't use an asset, you cannot claim, right? Then the law says you're supposed to compute this thing called notional allowance. So notional allowance will come in. Okay? So you minus off the notional allowance. Now, so that's how we get RE. Okay? That's how we get RE. Okay, then BA/BC. Now, if let's say you get BA, then that's a negative figure. But if you get a positive figure, that's a BC. Now, there is a rule about BC. Okay? Now, so maybe I just draw in some numbers to explain to you. Now, disposal value, QPE. Okay, let's say the QPE is 30,000. Now, IA and AA that you have claimed, 6,000. Okay, let's say we have another 6,000 and notional allowance another 12. Okay, so you have RE which is 6. Now, you dispose this asset for 25,000. Okay? Now, what do you get? You get a balancing charge of 19. Alright, now with the numbers that I've given here, this is what you're going to get. A balancing charge of 19. Okay. So you have to remember the rule. The rule is BC, right? Maximum is up to the allowances claim. You cannot have a balancing charge that goes more than what you've claimed. So in this case, the BC will only be 12,000. Why? Because that's the amount that you've claimed so far, which is 6 plus 6. The other 12,000 is notional. Notional you don't claim, so it's not considered. That's why we only take IA, AA, will charge back. Now there's a principle behind why the law said it in that way. Because you think and see, if you sell an asset, right? If you claim that this asset that you've disposed, you've made a gain on disposal. Gain on disposal. Okay, you know accounting, you have to work out a gain or loss, right? You made a gain on disposal. Now question is, do you tax this gain? No, we don't tax gain on disposal because gain on disposal is to do with asset. It's a capital gain. Just a loss on disposal, we don't allow because it's a capital loss. Now, if you say gain on disposal is capital, then why tax a balancing charge? Isn't balancing charge is like a gain on disposal, but from the tax point of view? It's a different way of calculating the gain. So if you look at it, it's actually the same thing. So if you say that one you don't tax it, why do you tax balancing charge? Now, that's why the principle is very clear. We don't tax balancing charge. We only take back what you have claimed. See, we only take back what you have claimed. Now, that's why in this case, when you come to a balancing charge which is 19,000, the law says no, it won't be 19, it will only be 12. So I never tax your gain, I only take back the 12,000. Now that's the principle behind. Now, so this is what we'll do when we have BAPC. That's the normal way of how we do it. Okay, if you don't have a justification for disposing asset within 2 years, right? Okay, if you don't have justification, now then para 71 of schedule 3 say all the allowances that you have claimed will claw back. Okay, all the allowances that you have claimed will claw back. How do you claw back? Claw back as a balancing charge in the year of assessment the asset is disposed. Okay, so the clawback will be in the year of assessment that the asset is disposed. Okay, so that's the first installment on how to deal with disposal. Alright, now let's move on to something a bit more. Alright, page 105. Okay, this is concerning when in accounts, right, if you want to dispose an asset, you will reclassify the asset as held for sale. Okay, so when you have an intention of selling off your asset, in the accounts, you reclassify them as held for sale. So from the eyes, when you reclassify the asset as held for sale, how do we treat it? We will deem that the asset will be disposed or not. Okay, so how do we deal with it? Now, and this rule is quite different from capital allowance point of view, and in the future when we learn about incentive, there's a different treatment again. Now, but today just look at what is the impact when we classify an asset as held for sale. Now, so the law basically tells us that when you classify an asset to be held for sale, you may have different time period that you actually sell it. Alright, you have different time period that you sell it. Now, you can sell the asset in the basis period it is being classified. So meaning, you classify in, let's say, YA 2019 lah, and you actually sold it in the same basis period of Y 2019. Okay? Now that's the more straightforward situation. Now you may also end up in a situation that after you classify, the asset sold in the following year. Meaning you classify in 2019, sold in 2020. Okay? Now, or you may also have a situation that is not sold after the end of the following year. Okay. So the law tried to tell us that when you classify your asset, right, that you want to sell it, how do you determine the disposal value? That's what the law is trying to tell us. How do you determine the disposal value? Now, the first part is when you sell in the same year, they say the disposal value will be the market value when you classify. So we'll go back to the date of the classification. And the net proceed. So the amount that you're actually selling the asset. Now that's why it's actually important that they need to have a record of what market value the asset has to be the moment when they have made a decision that they wanted to sell off the asset. So you have to keep a record, all right? Now you have to find your ways, like, for example, go to whether it's muda.my and get some sample or get a valuation or whatever, depending on what asset lah, okay? Or some kind of evidence of how you do bargaining. But you need to show that that is at that point. Because later on when you sell the asset, it could be, for example, you're selling it in the month of December, but the classification done in the month of February. So February and December, the value can be quite different. Okay, so that's what we basically tell them. You need to keep an evidence of record, because if not, when you're being challenged in the audit, what you're going to show. Okay? Now, this is for those that you classify and you sold it in the same year. Now, then they also mention that if you sold in the following year, that means 2019 you classify, 2020 you sell it. Now, for that, right, they say you will take the market value at the end of that year or the proceeds. Now, and you can have proceed because you actually sold the asset. It's sold. So you can have a proceed. Now, but if the asset's not sold until the end of the second year, then we have to deem the asset is disposed. So this is where there will be a deemed disposal. So if it's not sold, then we will deem dispose. So if we deem dispose, then what is the disposal value? It will be the market value at the end of the second year. You don't have proceed because it is not sold. Okay? Now, then they tell us, how do you get the RE when you have a situation like number 4? That means you're talking about a situation where the asset is disposed in the second year. How do you get the RE? Now they say the RE will be the total qualifying expenditure reduced by the IA that you have made the AA that you have made and then they say there should be an annual allowance which would have been made. Would have been means you don't have lah. Would have been made to that person for the basis period in which the asset was classified as held for sale, as if it has been in use. So actually this is like a notional allowance. Alright, that would have been made as if the asset had been in use. So that's actually a notional allowance. So that will happen for the year that you classify if you sell in the following year. Okay, now let's just look at the example, the next page. Okay, this is the illustration. Now we know that Tyco has a year end which is 31st December. Now, 1st August 2017, they have classified their office equipment to be held for sale. And they told you that these equipments were acquired 19 February 2014 at the value of 100,000. Okay, in the first case, right, they say that the market value of the equipment on 1st August 2017 is 65,000. Now, the equipment sold for 70,000 on 10 November 2017, when the market value is 61,000. Now, this date is critical because your year end December, when did you classify? August 17. So that's YA1 7. And which year did you dispose? YA1 7. So you are disposing the asset the same year as you classify. And what does the rule tell us about disposal value? You take the market value when you classify with the proceed and see which is higher. Now, that's why in this case, your disposal value should be based on the comparison of these two figures, 65 and 70. Because there are three market value there, you know. They give you a market value on 1st August. They give a market value on 10 November. They give a market value on 31st December. You have to pick one. And if you know the law, you know which one you're going to pick. Okay? Now, so the figure of the answers will probably be like this. Okay, so for Tyco, now the disposal happened in 2017. So disposal value will be the higher of the market value on 1st August 17 or the proceeds or the net proceeds. Now the market value on 1st August is 65 and the proceeds actually is 70. Now then we will take 70, that's a higher. Okay? So the only thing that we're showing you is how do you take the disposal value. So there are variation to the rule. And this came out in the exam question. The exam question got one condition. So you have to be able to discern which condition that they are giving you. Either they sell in the same year or they sell in the following year. You need to know to pick the right figure. If you don't know this, you can't pick the right figure. Now, so this is the DV. Okay, then what about the RE? Now the office equipment was acquired for 100,000. And then in year of assessment 14, that's the year you bought, right? You're gonna have IA and you're gonna have AA. Office equipment is 10%, okay? Now then you're gonna have 2015 and 2016, the capital allowance. Sorry, the annual allowance. Now that will be 30, 20. You see, your disposal is 2017. Alright, disposal is 2017. So 2017 got no claim one. The year you sell, you're not going to claim. Alright, 2017, you don't claim. So the RE is 50,000, so you get a balancing charge of 20,000 in the first case. Okay, look at case 2 now. Look at case 2. And spot what's the difference. Based on the date, you read that line and then ask yourself what's the difference. Now let's just ask yourself what will the disposal value be. Now this time you've classified in year of assessment 17, but disposed in 18. So that's the main difference now. So it's disposed in the following year. Now when you dispose this in the following year, that means you are looking at year of assessment 18. That's the year of the disposal. Now what's the disposal value? You must take the higher of the market value on what? What does the law say? The law say the market value at the end, correct or not, of the basis period where the asset is being classified. So if you go back to page 105, if you see point 4, paragraph 4A, you can see what? Equals to the market value at the end of the basis period or the net proceed. Okay, now, so 31st December 17, all the proceeds. So the market value on 31st December 17, it's given to be 55,000. And they say proceeds 45. So you're going to use 55. Huh? Okay, now, then what about the RE? Okay, I just take the RE up there. Okay, the RE up there is 50,000. I'm just using this figure because it's the same detail. Now, what's the difference now is this asset, right? You've claimed all the way until 2016. So 2017 is that year that you classify. But 2018 is the year that you dispose. So now the law added in page 105 and say that if your asset is sold in the following year, then the RE will be reduced by the IA, AA, and an AA that would have been made in which for the basis period in which the asset was classified as held for sale. So you just have to basically claim one more, which is YA18, YA17, that's the year you classify. That allowance that you would have been made, it's a notional allowance. So the RE will be actually 40. So your balancing charge will be 15. That's case 2, okay? Now let's go back to the third case. See the third case. Okay, what happened now in the third case is they are telling us that the equipment had not been sold even 31st December 2018, meaning until end of the second year, the asset was not sold. Now, until end of the second year, the asset was not sold. Now, notice I didn't tell you the proceed because the asset was not sold. So, I only gave market value, 31st December 17. Market value, 31st December 18. Now, that is why the law say if after the end of the second year you also didn't sell, right? What do? Deem, dispose. So you will have a situation where there's a deem disposal. And if you say deem dispose, then dispose at what value? At the market value at the end of the second year. So that's why in case number 3, now 2018, you have a deemed disposal value, which is the market value at the end of the second year. Now that's 48,000. Now the RE will be the same because it's the same year of assessment that you deem to dispose. So it's actually the same amount as the earlier one, 40. So you have a balancing charge of 8,000. Okay, it's the same situation. Okay, now then to finish off the last part. Okay, now, so what happened to the asset is they say they put back to use in 2019. Okay, if you say 2019 you sell it, right, then actually no issue already. If you sell out the asset, subsequently, we don't have to worry because we already dealt with the BABC. But the only problem is what if you change your mind and then you use back your asset? So they say if you use back your asset, right, then you must take the market value when you use back as your qualifying plant expenditure. So you expect what happened is you have a qualifying plant expenditure which is based on the market value on 15 January 19. That's 42,000. Now because you're using back. Okay. Then year of assessment 19. Because that's the year you use back. Now normally in the first year we will say IA and AA, right? Now the rule make it very clear that no IA will be given. So it will only be AA based on 10% of the new amount. Okay, now this part is given in page 106 of the notes. Okay, if you go back to page 106, you can see the provision of paragraph 6 has said that A, you deem to incur based on the market value at the date that is brought back into use, and B, they say no initial allowance shall be given. Alright, so I've explained to you all the treatment. Now, because this thing came out once in the exam, so I think you need to know how to handle. In case if you see the exam questions, they say that the company has got intention to sell, and then they didn't sell it, and then following year only they sell it, you know what to do. Okay? Okay, the basic stuff all done already. Let's look at something that is purely at advanced tax level. Okay? So let's go to page 108. Now, we're going to look at something that we usually call it as control sale or control transfer. That's how we usually call it. It's the commonly used term in the practice. It's called control sale or it's called control transfer. Not used in the Act. The Act does not use it in that way. The Act usually will say that disposal subject to control. That's the wording used by the Act. Okay? Okay. Let's start to look at what is control transfer or what is control sale. Okay? Now, the whole idea of control transfer or control sale is like a no gain, no loss. Okay? Now, what do you mean by no gain, no loss? So from capital allowance perspective, when you say no gain or no loss, okay, from capital allowance, loss is what? When you sell asset, you make loss, what do you call? BA. If make gain, BC. So when you say no gain, no loss, that means you're saying this is a situation that the BA or the BC must be 0. Okay? Now actually very easy one. Think of basic. How do you get BA, BC? What's the formula again? Disposal. Then what? Minus RE equals to BA, BC. So if you want the BA, BC 0, meaning the equation must be what? The disposal value must what? Must be same. So meaning this will be a kind of disposal that we will deem what? Yeah, it must be deemed the disposal value. It cannot be deemed the RE equals to disposal, ma. So you will be a disposal that you will deem DV equals to RE. So the BABC is 0. Okay? Now, and that's very important because usually when students go exam, they will say that it's a no gain, no loss. You know, that's not the right way of saying. What is a no gain, no loss? No concept, no principle. But you have to say that the disposal is deemed DV equals RE, so the BABC equals 0. You have to say that, okay? Now, why is control sale needed? Let's start to look at this part to see the purpose. Now, actually, control sale is meant to be a form of anti-avoidance. It's a way of how the government protect themselves from taxpayer trying to basically like cheat. Okay, what do you mean by protect yourself from taxpayer trying to cheat? Now, I'm going to use a simple idea and example here to explain to you. Now, let's think of A as the holding company and B as a subsidy. Okay? They are group. So what happened now is A bought a machine for 20,000 in 2012 and now they will dispose the same machine. A sell to B. It's a group, right? A sell to B. Okay? Now imagine now I'm going to sell to B. Doesn't matter what year lah. Okay, let's say many years later. Okay? I want to sell this machine to B for 100,000. After many years, let's say you finish claiming, let's say now it's Y 2020, alright? You would have finished claiming, the asset got no RE already, Then you go and say, okay, I want to sell the machine for 100,000. Now when you sell the machine for 100,000, what's the effect to A? Disposal value is 100, okay? RE is 0, BC is 100, right? 0 100 minus 0 is 100 long. Now, but what does the rule that we understand about BC? BC cannot exceed the allowances that we claim. So that means even though mathematically you got it as 100, you have to restrict BC to 20. Because based on the cost of 20,000, the most you claim is 20. I assume you claim everything. So restrict to 20. But what will happen to the subsidy? Subsidy will say, hey, I pay 100,000, so the qualifying plant expenditure is 100. So if like that, you have superficially or artificially inflated the amount for B to claim a huge CA. And it really doesn't matter what. I mean, if this is not your group, then no issue, no complaint. If this is not a group, the government is fine. Because how can you on earth find somebody that will pay 100,000 to buy a machine for you after so many years? If really there's this crazy guy that's willing to pay 100,000 to you and buy that machine, let the person claim. Because that's not cheating. But this is cheating. This is like, in a group, the money is just flowing within the group. Now that's why we know this one tak boleh. Cheat. Okay, tak boleh. Now new word, cheat means called main belakang. Okay, cannot. So the government say tak boleh ini main belakang. Alright. Now, so government also main belakang. Alright. New term. Alright. New hobby. Malaysia like to main belakang. Alright. Now, so if you say this is not allowed, ridiculous like that, you're actually cheating. So what can the government do to stop that? Now that's why the anti-avoidance law will come in. The anti-avoidance law will deal at both sides. They will deal at the disposer and they will deal with the acquirer. So the first part to the disposer, they say we will deem DV equals to RE. So you will have no BA, no BC. So seller, no worry with it. You have no effect. Alright, when you dispose the asset, you have no effect. What about buyer? Now buyer will continue claiming the CA as if you're the owner right from the beginning. Okay? So you basically inherit the asset. Alright? You inherit the asset. Oh, the girl so happy and wave at me. She skipped my class 2 days ago. Scold her. Alright? Okay, so that's the effect. Alright? That's the effect. That to the seller, no BABC. To the acquirer, you just continue. Now, in this case, right, your asset fully claimed already. So you continue with what? Continue with nothing. You don't claim anything because all claimed already. Now, so even if you sell the machine for 100,000, what happened to the holding? No effect. What happened to the subsidy? No effect also because it's fully claimed. So you cannot cheat. You want to sell 1 million also, doesn't matter. In the tax point of view, the figure doesn't make any difference. Now, that is how the anti-avoidance works. Okay? Now, so the concept of controlled sale, I've explained to you. So what is important now is you must know when will there be a controlled sale. Okay? Which will be what we're going to do in page 109. Now, so what is important is When does control sale occur? You must be able to identify the circumstances for control sale to apply. Okay, so let's look at the circumstances. I put 2 star here. Okay, 2 star. When does control sale occur? Now, control sale provision will apply when all these conditions are fulfilled. All. Okay, number 1, the disposer, the seller, is disposing an asset that Schedule 3 allowances had been made. You have claimed. That's very important. Claim the CA. Alright, you've claimed CA, you've claimed IBA. Now, Schedule 3 can actually apply to many allowances. CA, IBA, agriculture, they are all under Schedule 3. You must have claimed. So you see, this asset, I never claim anything. Okay, then never mind. If you have never claimed anything, then that's it. It's okay. There will be no control sale if you have never claimed. Okay, the second condition is you must fulfill one of the control situation. Now, the word control I put on. The law never say control situation, but because we use the word control sale, so you say a control situation. Now, you don't have to use the control situation. You just have to quote situation stated in the law. And you don't even need to quote the section because section quoting is not required in the exam. The section is para 38(1). Okay, so in the exam, you just have to say a situation as defined in the law. Okay, now the law don't use the word control sale, but the law uses the word subject to control. Alright, that's what the law uses, subject to control. Okay, last one. Is this asset that this guy sell to the other guy, it must be used. So you buy and use, alright? They are used. Now, they should not be part of your stock. An acquirer does not need to claim CA, only the disposer. Okay, only the disposer needs to claim. Now, so what is important now is, okay, first condition is easy. First condition is the seller has claimed. That one we know it. Third condition is the buyer will use. Now, that one also very easy. Now, the one that really we need to memorize a bit is the second one. How do you know that this is one of the situation? Now, there are 5 situations up there. You just need any one of these. Okay? Now, what's the first situation? Now, the first situation is, they say, the disposer is a person whom acquirer has control. Disposer, acquirer has control. Or they reverse. The acquirer whom disposer has control. Okay, now simplify the word because we are more active way of stating the sentence. So if I either use the word disposer, control, acquirer, or acquirer, control, disposer. Okay, you see the law like to state things negatively, right? That's why sometimes very hard to understand. Now let's just go more positive. Disposer, control, acquirer, A or B? Got some say A, got some say B. Okay, again, I read carefully. Disposer, control, acquirer. B. Okay? If you say disposer, control, acquirer, is B lah. Acquirer, control, disposer is A. Actually, it's not important one. A, B also not important. So as long as you know one control the other. Okay? Now, then the third one, they say some other person control acquirer and disposer. That means someone control both acquirer and disposer. Someone. Control DA. Okay, I will come back and tell this to you later because there's the three relationships that we always see in tax when they define the law, which I always say like I control you, you control me, we control by someone. If you realize the same principle apply when we talk about small company. To test whether a company is small or not, we say that if you have one of the component in the group is not small, the whole group is not small. But the relationship is also defined in the same way. Alright? Okay, the fourth one is they say when the disposal is due to a scheme of reconstruction or amalgamation. Okay, a reconstruction or amalgamation. Okay, what is a reconstruction or amalgamation? Now, this is basically moving around businesses. Now, I give you a simple idea. Now, let's say there is John, who is a shareholder to A. Okay? Now, and then there is Peter, who is a shareholder to B. So, John is the owner of A, company A. Alright, and Peter is the owner of B. So now what happened is John, Peter, they can set up a new company called C that will own A and B. Now this is an example of how a reconstruction would occur. Now, but not all reconstruction like that. Some are like that. Now, we'll only learn more of this in the future. But you can see the idea of reconstruction or amalgamation is there will be moving around of asset. Okay? There will be some kind of movement. Now, because there will be a movement of asset, there's bound to be disposal of asset. Like one asset from one company might sell to another company, like that kind of thing. Now, but they will all be control sale. Okay? Now, we'll see more of this next time. But I give you an idea first, that reconstruction bound to have movement. Okay? Now, then there will also be a control sale if there is a settlement or gift. Settlement, gift is the same meaning. Okay? Or devolution of property in the asset on death. That means the transfer of asset when someone died. So if somebody passed away, like my father passed away when he moved his business asset from his business to my name. Now, from my father's point of view, this is control sale. So there will be no BABC. So next time when we study cases for executor, when a person passed away, then how do you handle the asset? Then you recall that, okay, so when someone died, if you move away his asset, right, it's a control sale. You don't have to worry about BABC because that's what the law provides, okay? Now, that will be the 5 conditions under Para 31. Okay, now I will come back and look at the treatment later on. We can go for a short break. Then we'll come back, then we'll see the numbers. We'll look at how to deal with it. Then I'll come back and finish up the rest of the law. Okay? Okay. Now, so what is important is to first be able to identify the relationship of control. Okay, because in para 38.1, we have altogether 3 possibilities. The disposer control acquirer, or the acquirer control disposer, or someone control both acquirer and disposer. So you have to be able to identify the whole idea of what is control. Now, the concept of control is very similar to what we see in accounting. See, the problem in our tax law is they have different definition of control. Some will need you to have 90% share. Some will just need you to have basic normal control concept that we have in accounting. Some even 20% can have a deemed control, so that's the problem that we are having. So that's why we have many definitions, okay? Okay, so this definition of control is similar with accounting. That means it will be called control when you are able to appoint director. So from the point of view of accounting means you can do consolidation, okay? Now, so I give a couple of charts here. First one is Mr. Kok. He has 100% share in A that in turn own 100% in B. Now, so let's say if you have a disposal occurring between Mr. Kok and A. Now, would you regard that, okay, don't talk about other conditions, just talk about control. Would you regard that as control sale? If there's Mr. Kok and A? Yes, right? It's quite obvious, right? Okay, anything happen between the two, there will be a control. Now, what about if A and B? Yes, it's the same like K and A lah. So A and B and K and A is the same. Now, what about Mr. Kok and B? It's also the same, right? Now, what is the relationship? If Mr. Kok sell an asset to B, then you will say the disposer control acquirer, because when Mr. Kok control A and A control B, then Mr. Kok control B, right? Alright, now so that's fine. Okay. Now in this case, we only reduce the percentage of the shareholding from 100 to 60. So between Kok and A is the same, right? You have a control there, correct or not? Between Kok and A, between A and B. Now what about between Mr. Kok and B? So would you call this as a control? Can you say Mr. Kok control B? Can or not? Can Mr. Kok control B? That means can Mr. Kok determine who will be the director in B? You know, determine director very important one. From the past few days, you learn the importance of the power to put a person there. Because when you put a person there, that person you put is the person that control things for you already. That's why it's very important. Can Mr. Kok put his person there or not? Can. Because Mr. Kok can use 60% ownership in A to put somebody in A that listen to him already. And because A listen to him, then A will act on his order, right? Then A will decide on anything to do with B. Yeah? So in that case, Kok controls B. Now the answer is yes. But if you look at the effective shareholding, right, you only had 36% shareholding only, you know. Because the 60 of the 60 is only 36. But it doesn't matter what. So I control means I will be able to decide my directorship. I don't have to have X amount of share. And to me, the shareholding is not important. So even though you're only 36%, but the control is there, okay? Now, in the chart, okay, K and A, yes or no? Yes, Okay, what about K and B? Can or not? Can, right? Because Mr. Kok control 40% through A. And he himself has 30%. So it's way more than 50, right? So he can control B, what? Okay, now question is, what about if there's a disposal between A, B? Can or not? What do you think? Okay, how do you describe that para 38.1 situation? If you're gonna say yes, then you must be able to describe the situation. What is the situation? Yes, this will be a situation that they are both controlled by Mr. Kok. Now I know A doesn't control B. So that's why there's no issue about A controlling B. But the issue now is Kok control A and Kok control B. So Kok control AB. That's why anything that disposes between AB is under the third condition. There are three, man. This is the third condition. Okay? Okay, now last one. Okay? Now the last one I would like you to look at whether if a disposal happened between Kok and F, will it fall within control transfer or not? Will it come under para 38.1? Okay, what's the answer? If Kok is to sell something to F, will it come under para 38.1? Which relationship? Do you see Kok is able to control F? Okay, very simple one. One by one we look at it. Can Kok control the 20% through A? Yes, because he has 60%. Ma. Can Kok control the 20% through B? Yes, because you have control of B. Can you control this 20? No. What not all? No lah. 40% also you want to control. If 40% can control, that's why Mahdi become Prime Minister already, lor. They cannot, ma. Can say, no? So that's the problem, okay? Oh, but sorry, Malaysia a bit terbalik one, okay? Actually, they say they have, but I also don't know, okay? Then today you read newspaper, they say now the DAP and PKR jump ship already. Yeah, lor. Human also realistic one, okay? Who is the king? He has the power, alright? Then people will just come to you. No principle one. That's why politician, don't you all study ACCA so hard become politician, don't, okay? Later you get so corrupted, alright? Now, so you cannot have that 20% because you only have 40% in the company. So the control is not there. Now, then the rest of the two companies will be the same. So effectively, if you ask yourself how many percent that Mr. Kok has over F, 40. Not enough to control. So in that case, the answer is no. But if you measure the effective shareholding, I don't know whether you realize if you measure the effective shareholding, you actually have 12% plus 16% plus 8%, 8%, 8%. And that would actually be how many percent? 52, right? So this is basically telling us that even effectively you own more than 50%, you may still end up with no control. Okay? Just like what we had just now, you effectively own 36, but you still control it. So the idea is the same. Okay? So this is just to let you see the concept. Okay, so now what is important is to look at the numbers. So if you have a control sale, how do you deal with it? Now, the main issue with control sale is because disposer, acquirer, Now, they may be buying on the same date. Okay? The date can be a same date. For example, the date could be 16th of June 2019. The date is the same. But to the disposer, let's say 30th June is your year end. To the acquirer, let's say 30th April is your year end. Now, 16 June 2019, if the date is the date you sell and the date you buy, the buying, selling. Disposer, if your year end is 30th June, your Y is what? 19, right? Then acquirer, you be YA? 20 already, right? Because your date will be 1st of May until 30th April 20. Whereas your date will be 1st of July to 30th June 19. You see, the problem that we're going to have is this. The same date that transaction occurs may fall into different year of assessment to the buyer and the seller. And if you fall into a different year of assessment to the buyer and the seller, it affects us in terms of the claiming. Alright, it affects us in terms of the claiming. Now, why it affects, just take a simple example. Normally, when you dispose asset the year you sell, you don't claim any allowance, right? Fair enough? So that means you claim until YA 18. Then technically the person who buy will start claiming, right? But you see, you claim until Y18. The guy start claiming Y20, Y19 go where? Something is missing, right? Now, so there will be that kind of teething issues that affects us because of that inconsistency in the YA. So what's the solution? Very scared, I just feel itchy. Throat itchy because of the nangka. That's all I need. I just ate a nangka just now, alright? Suddenly, the feeling like itchy. I don't have fever, don't worry. After 14 days, I'm not here, then you worry. Alright? Okay, so the whole idea on how do you solve the problem is both sides must agree on the same day to use one approach. So what does the law say? This is what the law says. The law wants us to dispose the asset on one same date, which is the deemed date of disposal. Now, so the concept is like that. Okay. It will always be based on the acquirer one. Okay, the concept is always based on the acquirer. So you always look at the buyer. Okay? Now I'll tell you what we're going to do later, but I'll give you the concept first. It's always based on the acquirer. So you just ask yourself what year that the acquirer is buying. That's it. What year? So let's say you say acquirer acquired in Y19. Alright? Now, we want to focus consistently. If acquirer buy in Y19, disposer sell in Y19, of course must be the same year. I sell to you 19, you buy 19, 19. Now, so if you say acquirer buy in Y19, then the disposer will claim until 18. See, now it makes sense already, right? They make it in such a way that there will be a continuity. So if the acquirer buy in Y19, the disposer will claim up to Y18. So that you dispose in Y19. You sell over. And then acquirer will start claiming in Y19. Now, of course, when you say you dispose in Y19, the next questions that they're going to have is what date do you dispose? What's the date? Now, then they come up with a rule and say, let us assume the date will take place on the first day of the basis period. Now, so in the law, this is the wording, is deemed to take place on the first day of the disposal final period. Okay, it will take place on the first day of the disposal final period. Okay, now usually I'll tell students what you do is, if you can remember what I say, actually it's good enough already. But if you want a more simpler way, like a mnemonic, then I usually say remember DAD's rule lah. Okay, DAD. Okay, what is DAD? The first D is the date of disposal. Okay, the first D is the date of disposal, the actual date. Now, then you ask yourself, if you use the date, right, what is the acquirer's YA? Using the date, what is the acquirer's YA? Now, then using that YA, you ask yourself, what is the disposer's basis period? So that's true. The YA of the acquirer, the YA that we have, what is the disposer's basis period? Then we will use the first day as the deemed date of disposal. Now let's use an example down here to explain to you, okay? Right, AX, it's a subsidiary to Promix. And AX prepares its account to 30th June, and Promix closes its account to 31st March. Now, AX acquired an office equipment on 19 April 2015 at a cost of 60,000, and then disposed it to Promix on 16 July 2018. The consideration is 100,000. Now, first questions that they ask is explain whether there's any balancing adjustment arising from the disposal when AX sells to Promix. So they ask you to explain. Now, how should you write the answer? Not very good student, they will write an answer like no, because AX and Promix is a group, so this is a control sale. They usually will write something like that. They agak-agak got idea one. So they say no, because AX Promix is in a group, so this is a control sale. Now, by saying AX and Promix is in a group, do you even hit on the answer? No, because the answers tells us, the law tells us, you either identify disposer, a control acquirer, or acquirer control disposer, or control by someone. So you just say both are in a group. Which one are you saying? See, you don't hit to the point, right? Now, that's why it's good that we usually start with the law. Okay, we normally will say that a disposal subject to control okay, it's applicable. Now, of course, they are all three conditions, right? What's the three condition? The disposer claim CA. Now, this question, if like that, then I don't think I will not want to talk about all that, because they don't have information for me to come to that. All of a sudden, even if I quote it, it becomes very theoretical. Okay, but of course, there's one other condition that disposer must claim. Okay, disposer must claim CA. Now, there again, we say acquirer uses the asset. But I don't think these two is so relevant, because that's not the testing point of the question. If the question want to test these two, they would have given you information that will link to these two things. Like for example, maybe they will give you a hint about whether they claim asset or not. The claims here on the asset or not. But the third thing is you must have what? One of the control sale situation in the law is present. Now, this is the theory. Actually, the main testing is this. It's one of the control sale situation in the law is present. Okay, then when you do application to the case, then you will say what? Then you will say that the disposal by AX to Promix is subject to control because of what? Because AX acquired. Because AX acquired. AX sold to Promix, man. AX bought first, then AX sold it later to Promix. Okay? That's why we're talking now the second part where AX sold to Promix. So if AX sold to Promix is subject to control because of what? Because who control who? Because Promix. Now Promix is what? I know Promix is parent because yes, Promix is the acquirer. So it's actually good to highlight that when Promix control AX, you also see the fact that Promix is the acquirer. The acquirer control AX, the disposer. Because the law actually identify the acquirer and the disposer's relationship. So it's better if you say who control who. So if you say acquirer control disposer, now that's the best, okay? Now that would have clearly explained why the para 38(1) condition has been fulfilled. Okay, so that is the situation. Now if you say that the disposer is subject to control, then what is the effect? Because question say, will there be any balancing adjustment? So what will you say? You will say that AX is deemed what? To dispose the office equipment at its RE. Now, by saying the DV is RE, you already give people the idea, the effect. But if you want to go further, then you can even identify the date, because the RE is different when the period is different. So what would be the date that you can apply? Now, of course, then you can say it's deemed disposed at its RE on the first day of the final period. Now that's to put in the theory, okay? Dispose at its RE on the first day of its final period. So giving rise to what? No BA or BC. Now, this is a simpler way of just stating the fact that there will not be any BA-BC, because I already know that the relationship. This is a control sale, so I don't have to worry about BA-BC. Now, but if you want to make the answer be even better, Because usually we have to judge according to the marks. Alright, so if you want to make the answer be even better, what else can you do? You add details to the answer. So I always tell you that the more detail you give in the answer, the better the answers become. So how do you add details to the answer? Now you add details by bringing in the specifics. You know, you're just telling me the DV equals the RE. Now the specific is how much is the RE? When is the date? Now that's where specifics comes in. So this is how you expand on the answer, you see. You've got something which is like guiding you, give you a basic concept. So now if you want to expand on the answer, you will say, okay, the first day of the final period, what date is that? Then RE, how much is that? Now that become additional specifics. Then your answers get even better. So this is what you can do, okay? Okay, so how do you find what is the date and how much is the amount? Now I don't think I have enough space, okay? Okay, what is the rule again? DAD. Focus on the buyer. Look at DAD. Now, you are having AX selling to Promix. What date is that? 16 July 18. You know, as you get better with this, you actually don't need to write one. You see, then you'll be able to do your mental arithmetic. You know, like young people, they look at figure, they cannot count. But as they get better, right, they don't need to count. It's like auto one from the brain. So you just need a bit of practice. After a while, you get auto with this. Okay? Now, the date is 16 July. Then what is the A? Acquirer's year of assessment. So the acquirer is Promix. So Promix year end is what? 31st March, right? So ask me, tell me if 31st March is your year end, then if the date is 16 July 18, what year of assessment is that? 19. Correct or not? Why 19? Okay, if YA 19, then what is the disposer's basis period? Now, disposal basis period must follow the disposer's year end, which is AX year end. What's AX year end? AX year end is June. So Y19 means 1st of July 18 to 30th June 19. Now, that is the answer. You deem dispose the office equipment on 1st July 18. When the actual date is 16 July 18. See, I don't care. I just need the deem date. Okay, I need a deem date. So it's 1st July 18. Okay, then how much will be the amount that you dispose? Okay, so I need a bit more space here. Okay. Now, how much then you have to start with the qualifying plant expenditure? So AX bought it for 60,000. That's what AX is buying. Okay. Now, what is the first year that AX be claiming? YA 15. You got IA 20%, AA 10%, office equipment, right? So IA 20, AA 10. Okay, then you will go on for 16 until which year that you stop? 18. Correct or not? Because you dispose in 19. So when you say 19, you claim 16, 17, 18. Okay? Make sense? Because you sell in 19, so you claim until 18. This is nothing new. This is basic CA concept only. So you're going to claim AA for another 3 years. Now, so what you're going to have? 18,000. 18,000. So the RE will be 24. Now, meaning the deemed disposal value is 24. So 24 minus 24, 0. Now, so you know why that the specifics will get more marks now? Because the specifics require students to go through a lot of information to digest the information to get the figure. Whereas the general concept is a very basic concept that you don't need anything. You just say BA equals, DV equals RE, no BA, BC, you're done. But when you want to find the specific, that's where the testing point comes in. We really see whether you understand what you say or not. Now, so that is what we'll see basically from part A when you ask to explain. Okay. Now then part B, they say that what is the amount of Schedule 3 allowances that Promix will claim? Now, Promix is now the new owner, right? But what did we say about control sale? You will continue claiming as if you are the original owner. Meaning, now I can just come here and say, meaning, when Promix claim, your RE is now 24. Okay? Because you inherit the asset. The asset has RE of 24. You inherited the asset, so you get the same RE 24. Now, next question is, then when you start claiming in 2019, what do you get? You get annual allowance. Because you continue as if the asset was acquired by you from day one. So if you say as if the asset was bought by me from day one, how do you claim? You will take 10% or how much? 60, Not 10% or 24, no. The 24 is not your cost. You continue claiming as though you are the original owner. And remember, the original owner is AX. And AX been claiming 6,000. That's why you just continue 6,000, 6,000 for another 4 times. Finish. So it's as though you never sell the asset. If let's say you never sell, this is what you're going to do, right? You're going to claim 6,666, finish. So now the only difference is you indeed sold the asset, but the new owner will claim as if it's you. So they just take 6,666, finish. So whatever amount you sell doesn't make any difference. Now that's the whole idea of why we have control sale. So that you cannot manipulate figures to cheat the government. Okay? Okay, part C, they ask us, would there be any difference if I change the disposal date to 10th of April 2018? Because right now, the date is 16 July 2018. So I'm asking you, will there be any difference if I start changing the disposal date instead of 16 July, I change to 10th of April? Now, you look at it, then you tell me. Don't need to do it, just see, you can tell it. Any different? Will the DAD be different? I mean, the date of disposal is changed, is 10th of April 18 now. But the next question is, what is the acquirer YA? What's the acquirer YA? Acquirer is Promix, which closes account 31st March. It's still Y19, right? So any different? No. Because it's the same one. This is also Y19. If you change the date, it's still Y19. So the deemed date of disposal will still be 1st of July. No different. Okay? So that is basically how we apply control sale. Okay, we have done with that. Okay, now we're going to see something very special about control sale. So go to page 112. Now, the concept called short sale. If you learn finance, you probably heard of the word called short. You short or you long. Don't know what's short, what's long. Normally, you buy, then you sell, right? Now, you buy is because you foresee prices will go up, ma. That's why people say we long the thing means you know that price will go up, so you buy first. Then when it go up, you sell later. Short is opposite. If you know today's share market is going to drop, what are you going to do? It's better that if I can sell in the morning, then I buy back in the evening. Because morning the price was 2 ringgit, evening the price 120, let's say it's falling. So if I can sell at 2 ringgit, then I buy at 120, I make money, man. But how do you sell before you have? Because logically, you only sell if you've got something in your hand. So how do you sell when you don't have? Now, it doesn't make sense, right? That's why it's only possible in the world of derivative. That's why we can short the share. For example, we sell first, we buy back later. Malaysia also allows shorting one, alright? So, but our stock market can only do shorting intraday only. That means you can short today. Today morning you short, before the market close, you must buy back. And you can only do shorting on selected designated security, and not everyone can short, you have to apply one. So that's why it's not so simple, because we are a regulated short. So not simply for you to shock and short, alright? So cannot be like that. So this is called short sell. Now why do I want to explain the word called short sell? Because the law are trying to deal with a short sell situation in tax. Now, the qualifying expenditure incurred. Incurred is you buy or you sell, huh? Buy, okay. So that means you buy. Okay, you buy. Now, on or after. Okay, on or after. Now, the first day of the final period. What is the first day of your final period? Meaning is the disposal date. The first day of the final period is your disposal date. Now, that's not the real date, it's a deemed date, ma. It's a deemed date. Now, what is wrong with this statement? Buy after you sell. Very hard to understand, okay? Sell before you buy. Understand or not? It's actually the same thing. Alright? But you put like that, wow, very hard. Don't know what you say. Okay, now you're selling before you buy. You short, no? This is a situation that you sell before you buy. That's what it means. Meaning, you buy the asset, for example, on the 10th of March 2019. But the disposal date is 1st of February 2019. Now that's very funny, right? That's very funny, right? You say, hey, I only buy in March, but February I sell already. So that's why that's the strange thing, okay? Now, but the reason why it's possible, because the disposal date is not the real date. It's a deeming date. So because when they deem, this situation will occur. Okay, so now we want to tell you that when this thing happens, what is the impact? Now, the impact is very simple. The impact is we will treat the disposer does not own the asset. So the disposer will not claim any allowance. And we will let acquirer claim IA and AA. Okay, we'll let acquirer claim IA and AA. Now, let's look at one example down here, then we'll try to see how to deal with it. Now, Wan Sendram Berhad and Tan Sendram Berhad are subsidiaries of Big. Okay, W closes account 31st July, while T year end is 30th September. So on the 16th of May 2019, W bought a new director car worth 140,000, and the car was disposed to T on 19 August 2019 for 20,000. Now, first thing is who sell to who? W sell to T. And is this a control situation? Yes. In what way? The acquirer, disposer are both controlled by another person. Okay? Now, and W year end is 31st July, T year end is 30th September. Okay, now do this for me. Find me the deemed date of disposal. What's the deemed date of disposal? Okay, so what is the actual date of disposal? 19th of August 19. So what is the acquirer's YA? Acquirer's YA. YA? 19, right? Okay, if YA 19, then what is the disposer's basis period? 1st of August 8. So the deemed date of disposal is 1st of August 8. When did W buy the car? Yeah, you 19 only buy the car, 18 you say you sell it. You see something is very wrong, right? Now, so 2019 is the date you bought, 2018 you sell. Now we want to use the proper term. Don't use the word short sell or what, okay? You must use a proper term. So what's the proper term in the law? QBE incurred what? On or after the deemed date of disposal. Now in this case it's after lah. Because the date of incurring is 16 May 19 ma. The deemed date is 1st of August 18. So it's after. It can be after, it can be on, you know. It can be on or after. If after, usually students still not find it so hard one. Is the one on, wow, that you like, how? Example, if this question started with the date of acquisition, instead of saying 16 May, right? They give you 1st of August 18. Then in the exam, you'll be like thinking, wow, same date. But in the first place, I can tell you, in the exam, students won't realize one. If they really put 1st of August 18, easily half of the students won't realize anything wrong. Okay? They just say, it's the control here, no BA, BC, and then they'll move on. Alright? Now, so please be careful. Okay? Now, so when we have something like that, then the impact is what? T will then claim CA as if T is the owner and not W. So you will have qualifying plant expenditure at how much? 100, because this is a new car. The cost is 140, so restrict up to 100. Then you will start claiming in Y19, IA and AA, which is 20K, 20K. Okay? Okay, we have one last short example. Then I'll show you what we have from the past year. Yeah, because it's on or after. Okay. Okay, if you go down and see one last illustration here, it's to highlight to us what will happen when you have an asset under control sale. Then the asset is being disposed again. Okay, now the question tells us that P acquired a heavy plant on 30th June 2017 for 80,000. The plant was then sold to Q, the holding company of P, on 15 September 2018 for 30,000. Now Q then sold again. Q sold it to an unrelated party for 87,006 on 1st May 2019. Now what happened to Q? Because the first thing is P sold to Q, then Q sold to an unrelated party. So P sold to Q. Now that's the control sale. Then after that, Q disposed. So what is the allowances that Q can claim? Now first, of course, we know that this is a control sale. So you have to determine up to which year. Now what's the date of disposal? 15th of September 18, right? Now 15th of September 18, Q year end is 31st March. That means this is YA 19. Now if this is Y19, then P will what? P will deem dispose on 1st of January 19. And P will claim CA up to YA 18. Okay, this is a heavy machine. Heavy plant. Okay, so if heavy, then you know the AA rate is how many percent? AA will be 20%. Now, if your acquisition is 30th June 17, okay, if your acquisition is 30th June 17, which is YA 17, right? Because the acquirer, the original person who acquire is P. Year end is December. So you expect P, the qualifying plant expenditure was 80. Then you will claim YA 17. Then what else? YA 18. That's all right? Because you claim until 18, then you sell in 19. So how many percent will you claim now? IA 20, A 20, A 20. So 60% gone already. So if 60%, that means 48,000 gone. So your RE will be 32. Now this is what happened to P. That's why the deemed disposal value is 32. So the BABC is 0. So what will be the allowances available to Q? Now Q will inherit the RE, which is 32. And then Q will start claiming in Y19, right? That's AA another 16,000. Now then Q disposed on 1st May 2019. 1st May 2019 is YA 20 already. So as far as Q is concerned, the RE should be 16. So they ask you that what is the balancing allowance or balancing charge in respects of the disposal. Now you dispose for 87.6. That's YA 20. The RE now is 16. So technically the balancing charge will be 876 minus 16 716. But what's the problem? Your charge cannot exceed what you've claimed. Now this is the question. You're going to say that what's the amount that you have claimed so far? Now you have not just claimed 16. I know you say you claim 16, but you cannot just use 16 because this is a control sale. You have to look at the whole thing right from the beginning. So that's why instead of 71.6, your BC will be restricted to how much? 64,000, which is 48 plus 16. Okay? Okay, so that's the basic things that I explained to you about control sale. Okay, let's go to page 109 to look at something very small. Okay, 109. Now, okay, I'm going to discuss this particular case law with you. Okay. Now, this case law basically had a story like this, okay. So what happened is there is a company in Malaysia. Now, I simply just put the relationship. Let's say there's a subsidy here. And then overseas, there's a holding. So now the subsidy decided to sell a machine to holding. Now, because of control sale, it doesn't matter how much you're going to sell. At the end, there's no BABC. So the subsidy thought, okay, then I want to sell a huge price to the holding, all right, for whatever reason, to take money out, to let them claim more. We don't care, but that's the situation. Subsidy decided to sell a huge, large selling price to the holding, and subsidy claim this is a control sale, so there's no BABC. Now that was the situation. But the Inland Revenue very unhappy because saying that, wow, you sell such a high price, there will be a big balancing charge. Then I should be able to tax you. So the Inland Revenue come back and say, no, this one cannot be control sale. They say, why? They say, because the holding company that you sell to is not resident. So they come up with this excuse. You're not resident, all right? Where there's nowhere in the law say you must be a resident. Okay, so they bantai one simply. Okay, simply because Inland Revenue they simply say things one. Sometimes you don't care, ma. You don't care, then you let go, lor. You let go, then they make the money. To them, that's the problem. So even in personal tax, a lot of times like that one, they're simply not allowing you claiming a relief, and they tax you, hoping that you don't argue. And in most cases, a lot of people don't want to argue with them. I donate to you, government so poor, I give you, you see, no? Then they zap to, you see, no? But if you are very stand firm and say that I'm not wrong, then you're going to argue. Chances you're going to win. Now, so this is a case that they want to tax this taxpayer and deny them the control sale. Now, if you read it, it says that SEOD transfer an asset to the subsidy, which is a non-resident, okay, outside Malaysia. Now, Inland Revenue issued an assessment denying the beneficial treatment under control transfer provision. The taxpayer appealed and argued that they have satisfied the 3 requirements under the law. Now, what's the 3 requirements? Number 1, the taxpayer had been granted CA. That means you must have claimed CA prior to the transfer. Number 2, you have control relationship. Number 3, you will use the asset. So they say the rig was used by SFE. Now all the 3 conditions are fulfilled. Then you have to grant me the control sale provision. Now, so what was the outcome? The outcome is the special commissioner allowed them. That means they win the case. Okay, so that case suggested to us that whether or not you're resident, all that not important. Only 3 conditions we need to see. Alright, so you've claimed CA, alright, the relationship, and then the buyer will use it. Enough. Okay, then what about, let's say, we reverse the situation. Now there is a overseas holding, and then there is a Malaysian subsidy, and now the overseas holding wanted to sell a machine. The holding want to sell back to Malaysia, and the holding will want to sell at a huge selling price, so that the Malaysian side will be able to have a huge amount as your qualifying expenditure. Now, can that work? So if you want to ask, then you have to ask yourself, then control sale apply or not? Because if control sale apply, then it won't work, because it will be DVRE, then you just continue claiming. So the question is, control sale apply or not? What do you think? Yes or no? Control sale. 3 conditions. First condition is what? That guy must have claimed CA. And that guy is who? Somebody out there, right? Now, and will that guy claim CA? I mean, looking at the case is, if you're overseas, business is out there, how on earth are you going to claim CA, right? Because CA is a Malaysian tax provision. So that's the first condition. So if that guy cannot claim CA, then you cannot have control sale. That's why in this case, control sale is unlikely to apply. So control sale is more on the side from Malaysia go out than outside come in. Now that, of course, they say, wow, then like that very good, lor. You just inflate the price. Now, of course, the law also not stupid lah. We always have different provision that can cater for it. So that's why in the Act, right, we have para 2C that meant for that. That says, if you have any plant or machinery that will be brought into use in Malaysia by a person that prior to this machine being used, it had been used outside. So it had been used outside, exactly like the case that we say. Now then, the law says what? Deemed to have incurred the QP equals to what? The market value or the net book value, whichever lower. So cannot cheat also. So you can inflate the price, but at the end of the day, they don't care how much you sell, because they'll use the market value or the net book value, whichever lower. Okay? Okay, so that's the small tiny bit just to finish off concerning control sale. Okay, please go to page 113. Okay, this is a past year question. Alright? Again, it belongs to a much longer question where I just extracted the most relevant part. Okay, now not all details are there. Okay, not all details are there. Okay, but this is a 10 marks requirement. It's a very heavy question, It's 10 marks requirement that they ask the student to explain why control sale provision will apply. Meaning definitely got one, because they say why will it apply? That means you say it will apply because condition 1, what is it? Fulfilled. Condition 2, fulfilled. Condition 3, fulfilled. That's why it applies. Now, why control sale apply? Okay, then it goes on and say, what about the entitlement of allowances to big and small? So the entitlement. Now, and then they put in bracket IA, AA, BA, BC. So you're supposed to talk on all that. So like example, like you don't have IA. Or you will not get BA, BC. So that's entitlement. Okay, you talk about entitlement on both sides, on big and small. And is in relation to the asset transferred for year of assessment 2012 and 2013. So there are 2 years or so, 2012, 2013 for big and small. Now, the story is like that. Pursuant to a merger agreement between big and small, big will acquire the entire shareholding of small on 15 July. Now, examiner also try to make it very clear so that you don't have to have that kind of argument. Big will buy all the share of small on 15 July. Then, that means later, on 1st of August, that means you already control it. Alright? So on 1st of August, small will transfer all the asset. Small will transfer all the asset. And in bracket, some of the asset they bought on 5th of June 2012. What's so special when the asset you bought on 5th June 2012? I mean, if you make a wild guess, what are the things that likely they want to test you? Short sell, exactly. Because you sell on 1st August 2012 and this asset I just bought 2 months ago, then very likely that this asset could be what? What's the term? Incurred on or after the deemed date of disposal. I mean, I don't know until I work it out. Okay? Now, they say they will sell all the assets and some are required on 5th June 2012. Liability activities of its trading business to Big to be merged with Big's business from 1st August 2012. So now the question is, number 1, why there is a control sale? Now, to have control sale, you must have 3 conditions. And the most important condition here is what? The control. And do you see the control? You see the control because of what? Big has acquired the entire share holding of small. That means who control who? I know Big control small, okay? But the disposal acquirer, you must tell me who is controlling who? Acquirer control disposal. Okay? Now, so this is what the examiner write. Examiner say that, okay, Big acquired the entire share capital of small on 15 July. Then they buy the business on 1st August. So examiner try to show you that's how it happened. Then Big therefore control small on 1st August 2012. So Big control small on 1st August 2012. Now the reason why the examiner said there's a control is because you have acquired the share. So acquiring the share, it's a very important fact or important event that must take place. Okay? And I would rather you say, because Big control small, Big is the acquirer, control disposal. So I would use a bracket. I would say Big is bracket acquirer and then small bracket disposal. Even better. Okay? Even better. I know you say, but examiner didn't say. You cannot learn better things, man. Why you want to always comment about people not good one? Good things we learn now. Can you see, always say, that one didn't write. Then follow all the bad example for what? Learn the good example, please. Okay? Now, the asset transferred to Big along with the business, so these transactions will be controlled. So the provision will apply. Okay, so when the provision apply, then the next thing is we need to find what is the deemed date. Now you see the way examiner wrote the answer. Examiner basically write back like what I tell you. Big close account 31st July. Small close account, 31st May. See, she's writing the year end. The disposal is 1st August 2012. And that falls in the basis period of 1st August 2012 to 31st July 2013 for big. Big is the acquirer. Acquirer is what we follow. So, examiner just tell you the year end, then what is the date, then what is the basis period. Now, then applying the control sale, they say the first year of assessment that big will qualify for CA is YA13. Because that's the year you buy, Y13. That's why I say big will start claiming in Y13. Now, because acquirer will claim in Y13, disposer must sell in Y13, right? What we say, follow the same YA, disposer. So disposer will sell in Y13. So what is the final period for small? Y13, no? And what's the first day? Now, 1st June 2012. So basically, examiner is using her way of English to write back the same detail. What is the date of disposal? What is the YA for the acquirer? Then what is the basis period for the disposer? And what's the first date? Now, you don't have to write exactly like what she write, but you can use the same sequence like what I say. Important is the answers are there. Now, then they will say that, so small will claim until YA12. Because big will start in Y13. So small claim until Y12, big will start in Y13. Now, because this is control transfer, there will not be BABC for small in 2013. Now that's very important because question asks that. Question say entitlement of IA, AA, BABC. So you never write this statement in the answer, how are you going to get marks? So you must say there will be no BABC for small. But why? Because the disposer deemed at what? RE. Now, and then it goes on and says that big will not claim IA because in control sale you only have AA. Except what? Except those assets acquired by small on or after 1st June 12. Because 1st June 12 is the final period, the first day of the final period. So anything incurred on or after is considered short selling. That's why the seller cannot claim anything. And that's the reason why the examiner say, if anything on 5th June, then this will be deemed incurred by big and not small. So big will claim IA and AA. Alright, now examiner don't have to say that because the statement said that big will not have IA except, meaning you have IA. That's why they didn't say that you can claim IA because the statement itself is understood that the IA element is there. Okay? Okay, so that's how the examiner has tested this question. Now it's quite rather old, like it's 2012. But it is a good way for you to see what that you're expected to do, especially when the marks are so high. 10 marks. So you know what to expect, what to write. Okay? Alright, now before we move on, there's one short example down there. Okay? Okay, Michael has a sole proprietorship business. He intends to cease the business and transfer these assets into MG Sendirian Berhad. Now, so he wanted to cease his business and move his asset into MG. Year end is 30th June. It's a newly incorporated company where Michael will own 100% share. Now, the business asset as at 31st December 2018 will be transferred into MG Sendirian Berhad. Stocks worth 25,000, which can be sold with 40% profit margin, transferred at 35K. Machines acquired for 120,000 in June 2015. The market value is 60,000, transferred for 50K. Now, what is the income tax implication for the above transfer to Michael and MG? So two parties that we're asking, Michael and MG. Okay? Now, so two sides that I need you to look at. Michael and MG. Okay, I just need your main point. You need two things. You start with stocks and then you go on with the machines. Okay? Try. Okay. Just want you to think about the points. Okay, the first thing is when you talk about the stock, what will be the key points that you will mention in the answer? Give me one or two words only, enough only. The most important word that you're going to use. Like what? Cease is very important. Because you have to identify the fact that Michael is ceasing his business. And the law says that at the time or about the time you cease, you sell your stock. So you have to identify it's a cessation. Okay? So there will be a cessation of business. That's one element. What's the other element? That these stocks will then be bought over by someone that will what? That will use it in the business of that person. So that's why it's a cessation plus it will be acquired by a person that uses it in his business. So that's the important condition that you have to fulfill. That cessation is there, then the other person is buying and using it. Now, then what does the law say? Whatever price that you dispose is the income to the seller and the cost to the buyer. So in that case, you will have to highlight the fact that you will use 35,000 as your gross business income. Because that's the price you sell. So you have to say that, which I've told you already. The price that you sell will be used as the income to the seller, the cost to the buyer. So 35,000 is the cost. So, it's the income. If 35,000 is the income, basically the effect is what? You will tax 10,000 because the cost of the stock is 25. So if you say 35 is your income, meaning you expect that there will be an adjusted income of 10,000 because the cost is 25 will be assessed in YA18 because the thing happened in 2018. Now these are all detailed. The 35,000, the 10,000, the Y18, these are all examples of detail that you apply from the facts. Now then what will happen to MG? That this will be the cost of the stock based on the price that it pays. So the amount that it has paid is 35,000, so that will be the cost of the stock for its business. Alright, now I can't apply any year of assessment because you don't know whether when they actually sell it. But when they sell it, that's the cost. So it's 35,000. Now this is the issue to do with the stock. Okay, what about the machine? Now of course from the fact that they say Michael owned 100%, so you will identify that this is a control sale, right? So a control sale situation is applicable. One, because Michael have used it in his business, implying he must have claimed CA. Then number two, what is the control situation? The disposer, which is Michael, controls the acquirer, which is MG. Okay, so if you know that that is a control situation, then you will know that what will happen to Michael, right? You will have to say that it will then be deemed disposed. Now, the two important facts that you can bring into the answer is the date of the disposal and the deemed disposal value. So you have to put the deemed disposed on what? And at how much? Okay, so what is the deemed disposal value? Now, MG will be closing their account on 30th June. So, MG acquires in YA19, right? So, if MG acquires on Y19, then to disposer, which is Michael, what is the basis period? Michael's basis period for Y19 is 1st Jan to 31st December. So the deemed date must be 1st Jan 19. Now what is the deemed disposal value? Now then you got to calculate. So the qualifying plant expenditure was 120,000. And then YA15, you would have got IA, AA14. Then you will go on for 16, 17, 18. Because the disposal take place in Y19. So there will be another AA for 3 years. So 34% will be 40,008. $50,004. Now, so you have RE of 28.8. That means the deemed disposal value will be 28.8. Now, this is what happened to Michael. Now, and if you know what happened to Michael, then you more or less can tell what will happen to MG, right? So MG will inherit the asset at 28.8, and then you only continue claiming the IA. Sorry, the AA. The AA will be 14% of 120, which is 16,008. So you're going to claim two more only, 16,008, 12,000, finish. That's the amount that you're going to get, okay? Now, so that's basically lah. So if I give you a scenario like that, you must be able to see all that. And now you notice we're incorporating the things that we study about trading stocks. And then we talk about this part to do with control sale. So in the future, as you move further, then you realize that you just get more and more, okay? Okay, now if you go to page 114, okay, take note. Now, if acquirer did not use the asset, now remember, claiming is actually not important. All right, you don't have to claim, but you have to use. Okay, so that's why here they say that the disposal under para 38 is control sale, does not seem to have occurred, and this will be deemed as a normal disposal. Okay, it will be deemed as a normal disposal. Then in that case, the disposer will be liable to BABC. So again, example, Anthony Crow, Sandram Berhad, ACSB, and Faber, they close account 31st December, and they are both controlled by the holding company, okay, for LGE Holding. Now, both companies are carrying on business of printing clothing. So on 7 July 2015, ACSB purchased a color mixing machine for 200,000 and then disposed it to Faber. Now the market value is ascertained to be 145. Now, but the statement here is Faber did not use the machine. So if you buy and you take over and then you don't use the asset, right? Now then this is not a control sale. Okay? So this is a very important statement to justify that why that control sale will not apply. That's why 3 conditions. You yourself claim, the buyer must use. Then the third thing is one of the para 38 one. Okay? So that's why we will treat this as a normal disposal. So you expect ACSB will have BABC, and then Faber will claim based on the price you pay. I mean, there's no such thing because in the first place it didn't use. Okay? So it will be a normal disposal. Okay, now transfer as a result of death. Okay, now you have to remember that in one of the para 38(1) condition include when someone pass away. That's why the provision of control sale would apply if, let's say, the asset used in the business is transferred as a result of a will. Control sale apply when the asset used in the business of deceased, the person who died, is transferred because of, let's say, the will, say when I die, I pass over. Now, the example here says that Tashwinder passed away on 21st November. He runs a trading business which is passed on to his daughter Jaswinder. Now, Jaswinder took over the business. Now, meaning the business goes on. She's still doing business. Meaning if she does the business, meaning she will actually claim, she will actually use the asset. So the asset is still used in the business. Now, so she took over on the 5th of April 2018 and accounts are made up to 31st December. So one of the assets inherited is a new photocopier machine bought for 70,000. Now, this will be treated as control sale. Okay? Because the father must have claimed CA. Jaswinder intend to use it. And then transfer due to death is one of the para 38 one. Okay. What about partnership? So can control sale apply if let's say there's a disposal which involve a partnership? Now if you see the requirement, I mean the detail it says here is Aino and Mawa are partners in a pet shop registered under Cutie Cats Partnership. Now they both share profit loss 60-40. Now you look at the ratio is very important. Because ratio suggested that who is the controlling partner. So if you have 60, right, then we take you as a controlling partner because you have a bigger entitlement, alright? So I know has 60% entitlement. Now the partnership bought an aircon for 10,000 on 24th of March 2015 and sold it to AYS and Ramberhart on 28th of June 2018 for 3,000. Now I know has 80% shareholding. Now that's a very critical point. She has 80% shareholding in AYS. So what is the para 38-1 relationship? That disposer, control, acquirer. Because I know also controls AYS. And I know represents a partnership. But I know control 80% of AYS. So the 80% is critical to show that she has control over the company. And 60% shows that she has control over the partnership. So from this respect, what if you say that is a 50-50 partnership, then cannot? Because 50-50 means neither control. Alright? Unless you have a 50-50 who own 50-50 of the company. Then different story. Because if two partner has 50-50, the same partner has 50% of that company, then the 2% control the other company. Then of course yes. Okay? But if you're just saying that I have 50-50, then it doesn't show any form of control. Okay? Alright, so these are the relationship that deals with control sale. So we have only like 10 minutes. I don't think we have time to do that question in 115. Okay, page 115, it's basically a very, very old past year. Year 2000, maybe you just born, right? The year you just born, okay? You go back and try to analyze the question. So basically what happened in this example is we gave you some the structures of the company that belongs to Mr. Nick and Encik Nora and how many percent share that they hold in respect of all these companies. Now then at the bottom, we basically give you a couple of scenarios. Now very easy one. You just gotta go back and say whether yes there's a control sale or no there's no control sale and why. Now example, they say D sold a 10-year-old lorry to B after all the allowances have been claimed. So where is D? D sold to B. Now I think that's quite obvious. D sold to B. B already has 55% share in D, right? So what is the situation is here, who control who? Acquirer, which is B, controls disposer, which is D. Now, so the para 38-1 condition is there already. Okay, and the fact that you say all allowances have been claimed, I think it's clear fact that the seller has claimed the CA. Alright, the allowances is claimed. Now, there's another condition that disposer has claimed the CA. Now, so they say all allowances have been claimed. Does it matter? Doesn't matter what. So if you have claimed everything, the RE is 0. So when the RE is 0, that means you deem dispose at 0. Then the buyer will have inherited the asset at 0. Then the buyer got no CA, that's all here. Okay, but it doesn't stop you from having a control sale, right? Can you see not? So this is yes. It will still be a control sale. So you probably have to add in and say that all allowances have been claimed is not relevant. Alright? So it's not relevant that the RE is already 0. Okay, now try one last one. Now, B sold a fax machine to D. Now we switch. Just now it's D sold to B, now it's B sold to D. Now when it says B sold to D, they purposely add a statement that after owning for almost 2 years. What is the testing issues that they're having here? Why are you telling me almost 2 years? Yeah, because you know there's a clawback, right? That says that if you dispose of asset within 2 years, we'll claw back. Now this is actually to trick the student and say that if there's a clawback, that means I never claim anything, because you claw back you. Then maybe there's no control sale. Does it apply that way? No. Okay? It will still be a control sale, because when we look at control sale, we look at the whole group as one. So we will not see that, oh, this is only less than 2 years and then there's a clawback. That's why the clawback doesn't affect you. So it will still be a control sale, and you have to highlight that this fact that it's almost 2 years is not relevant. So B will still be able to claim CA. Alright, you will still be able to claim CA. Now, and the same thing apply if some of you are thinking of the short selling. That you say, hey, then the short selling like that, if you look back, they say that the disposer will have nothing and then the acquirer will claim IA and AA. Then in that case, does it mean that the guy never even claimed anything, right? No, but that one is a special situation. So it's a provision in the law that already provided that you should not claim and pass it over. That's why all that is not important. So that's the reason why the fact that you tell me is owned for almost 2 years doesn't apply. It's not relevant because clawback is not applicable to control sale. Okay? Alright, so I have done the first 2 to give you a taste of what this question is requiring you to do. There's another 4. Just go back and try it out when you are free time. Okay? I know you're not very free all the time. Okay? But just go back and try. Alright? Or next week before we start, when you are here, just at least flip through and then see. Okay? So next class, we will move on and look at interest. Alright, very exciting topic because there's a lot of rules to learn. And then we will cover a very new thing called earnings stripping rule. Learn how to strip. Okay? Thank you very much. See you next Monday. Wait. This Saturday, I don't have class with you, all right? Next Saturday, Okay. See you Monday.